Good afternoon, one and all. Today, my name is Mr. Vinay Arya. I'm here going to tell you about little bit what is financial management and a little bit introduction of capital structures. What are the different theories of capital structure that we have in our financial management, right? So before going towards the capital structure, first let us understand little bit about financial management, right? So as we all know that the financial management is consist of two terms, that is finance and another was is management, right? So what we are doing here, we are basically managing our finances. We all know that when we operate a business and when we have our a little shop also, then we need funds there to operate basically our day-to-day activities, and we need funds to investment for long term. So the management of these funds is basically known as financial management, right? So it is also considered as the lifeblood of a business organization. So it is very crucial, and it is the financial management, the financial manager basically must have put his or her due efforts while managing their finance, right? So there are certain basic there are normally three decisions that we study in while studying the financial management. Basically there are three study decisions. First is your investment decision, second one is your financing decisions, and third one is your dividend decision. So there are different schools of thoughts that tell us about that the investment decision will come first or the financing decision will come first. So basically that is not the matter of discussion here. We have to focus on basically financing decision only, right? So I'm just briefing you a little bit about all these three investment decisions that we have. First is our investment decision. So what is investment decision? In investment decision, basically a businessman or corporate organization basically plans that what are the different alternatives that they have, where they will plot, they will park their funds, राइट। आई मीन हिंदी में अगर मैं बात करूं तो हमको अपना पैसा लगाना कहाँ पे है, हमारे पास ऑल्टरनेटिव्स क्या क्या है, राइट। सेकंड इंपॉर्टेंट डिसीजंस दैट अबाउट विच वी आर गोइंग टू टॉक अबाउट दिस इन दिस सेशन इज योर financing decision. Financing decision is basically a kind of your capital structure decision also, where you will decide that how much money and from where you will I mean bring the finance or the fund to your company, right? We have different alternatives bringing finance, like we have say equity there, we have debt there, and we have other borrowings also, like if we taking loan. So these are the different alternatives from which we can borrow our money, right? Third important decisions that we have in front of us is our dividend decision. In dividend decision, basically a financial manager decides how much money one should be distributing as the dividend, right? Dividend is basically, you can say in a layman term, is the earning of the shareholders that they are receiving after investing certain amount of money in any company, right? So our main focus in this session will be on the capital structure decision, or we can say a financing decision. See, there lots of people got confused about the financing decision or financing structure or the capital structure are of same thing. But we should understand that the financing decision or financial structure and the capital structure are not like, I mean they are, the two things are not synonyms. I mean there is a difference between capital structure and the financial structure. First, in 1 minute I will tell you that what is the actually basic difference that we have in financial structure and capital structure. So financial structure is a broad term and capital structure is a narrow term in comparison to financial structure. Or we can say that capital structure is included in the financial structure. How? See, financial structure is basically includes your short term as well as long term finances that one should bring it to their companies. Like in short term, we have 1 month loan, or we can say if we are raising money for 1 or 2 months, and we can, I mean normally within 1 year if we are paying out that debt, so it's called your short term debt, right? And other hand, we have a long term borrowing, or we can say if we have equity in our company, in our capital structure, so that is known as capital structure. So it is very clear, we should be very clear, financial structure include short term as well as long term fundings for our company, but capital structure include only long term funding for our capital for our company say, right? So we have basically capital structure. If I summarize capital structure in a one line, so capital structure is basically the summation, or we can say it is the accumulation of different alternatives. And then what are the alternatives? We have we basically consider two main alternative. One is our equity and another one is our debt. So though we have different alternatives also, like if we are going for loan, or if we are taking money with the help of our commercial papers, or say preference share and etc. But we will be focusing mainly on our equity and as well as our debt, right? So what is capital structure? अभी तक हमें जो समझ में आया, capital structure is the summation. Capital structure is a basket. We can say it is a basket, in which basket there are some product which we are calling as equity and some product which we are calling as debt. So what is the problem with the capital structure decision, and why we are studying the capital structure? The main reason behind the study of the capital structure is that how much equity should be there, or how much of the debt proportion should be there. That is the main important decision that we have to be focused about, right? यानी कि हमारे कंपनी में कितना, अगर 100 रुपए की हमारी कंपनी है, तो हाउ मच शुड बी द इक्विटी और हाउ मच शुड बी द डेट? इफ इक्विटी इज 60, right? If its equity is 60, so debt will be automatically 40, right? If we can say 62% ratio of debt and equity. This is also called as debt to equity ratio, which we are not which we are not going to discuss about what is debt to equity ratio. Our main focus is what is capital structure, that I already tell you कि कैपिटल स्ट्रक्चर क्या होता है. इट इज अ बास्केट ऑफ योर alternatives from where you get your funds. Basically we are considering two funds here. One is your equity, that is shareholders funds also called, and another is your debt fund. Debt fund is basically a kind of fund where it has a fixed maturity. After that time of period, the company will pay you off, and meanwhile company also pay you a fixed amount of return annually, right? So this is simply called debt, right? So what is the main purpose of our this session? Our main purpose is not to study only about what is capital structure, what is equity, and what is debt. Basically we have to study what are the different theories about the capital structure, right? How these theories will be applicable in the practical world, right? So if we talk about, in generally we study a four type of theories, and first one is our NI approach, net income approach we call it. Second one we have is our net operating income approach. Third we have a traditional approach, and last finally we have Modiglani-Miller approach, right? So we will discuss all these three approach briefly, and we will try and understand and make our concept clear, that what is NI approach, what is NOI approach, what is traditional approach, and what is Modiglani and Miller approach, right? All right. So talking about capital structure a little bit, which I already told about, it can be defined as the mix of own capital and borrow capital. I don't need to put much of time here, and I am taking you to our first we can say theory of capital structure, that is your NI approach, right? So yeah, just give me a moment. Yeah, so here we have NI approach. NI approach. I hope you people are able to see. Let me adjust a little bit. Right, NI approach, or we also call it the net income approach. Basically, first, before taking your focus towards the PPT, I just want you to listen the only words which I am telling you. It is an approach which says that capital structure is relevant for the value of a firm. I'm repeating my words again. It is an approach, net income approach is that type of approach which tells us about that the decisions which a financial manager is making for regarding capital structure, whatever the decision that the financial manager is making, like if he is going for equity, and if he is going for more of debt, so that decision will definitely affect the value of the firm. Now big question arises in our mind, that how this affect the value of firm. I'll tell you in a little bit. First, but before that, we will going to read some certain assumptions of that net income approach, right? So NI approach assumes that there is a continuous increase in the debt does not affect the risk perception of investors. Means to say that whatever amount of debt you incorporate in your company, यानी कि कितना भी डेट आप बाहर से ले आओ, कितनी भी आप उधारी ले लो, उससे जो शेयर होल्डर्स हैं उनके रिस्क परसेप्शन पे कोई फर्क पड़ने वाला नहीं है। मीन्स टू से दैट दे विल नॉट डिमांड हाई कॉस्ट ऑफ इक्विटी फॉर देयर इन्वेस्टमेंट, एज सिंपल एज दैट, right? I'm repeating it again. if you are incorporating or if you are leveraging more on debt, अगर आप ज्यादा डेट अपनी कंपनी में लेके आ रहे हो, तो that more debt will not affect the preferences of your investor, or we can say the perception of your investors towards your company, that your company is will going to be more riskier. Definitely it will be going to more riskier if you are, so अगर आप ज्यादा डेट ले रहे हो तो you have to pay more interest also, and in the particular year if your company will not be able to make any profit, still you have to pay that high debt, high interest, or we can say, right? So definitely it's natural that the risk perception of consumers will, or we can say the investors will change, but it is assumption here in an approach that the risk perception will not change. Second main assumption is that cost of debt and cost of equity will remain same. I'm repeating what I said. I'm saying that your cost of debt and cost of equity. Cost of equity is basically whatever the payment we are making to our equity shareholders, and the cost of debt, whatever the interest that we are paying to our debt owners, right? So we can say that it is the second assumption that the cost of debt and cost of equity will remain constant. And the third important assumption is that cost of debt will always be less than your cost of equity, यानी कि जितना पैसा हम डेट होल्डर्स को दे रहे हैं वो हमेशा कम रहेगा किस पैसे से, जितना पैसा हम अपने इक्विटी होल्डर्स को दे रहे हैं, right? And another minor assumption is that corporate income tax does not exist, so where we are not considering any tax at all, right? So this is a basic structure of NI approach. So I just want you to make it understand with the help of a graph also. Just give me a moment. Yeah, here we have the graph of NI approach, right? So as you can clearly see that we have three lines here. One is KD, one is KO, and one is KE. KE tells us about cost of equity. KO tells us about overall cost of capital, or WACC, yani weighted average cost of capital, and KD tells us about cost of debt. Here you can see that as per our assumption, KE and KD are remain constant. They are straight line. They are horizontal to your x-axis, right? So they are constant. They are not changing at all as per as our assumption. Second assumption we have just read out is our cost of debt is lesser than our cost of equity. Here we can say that हमारी cost of debt जो है वो कहीं ज्यादा कम है cost of equity से, right? अब हो क्या रहा है, you can see that clearly overall cost of capital जो है वो decline कर रही है, right? So overall cost of capital का decline करने का जो main reason है that is कि आप जितना ज्यादा डेट अपनी कंपनी में लेके आ रहे हो, बिकॉज वी नो दैट एंड यू शुड बी वेरी क्लियर अबाउट दैट, हम डेट अपनी कंपनी में लेके आते हैं, उस डेट का जो हम इंटरेस्ट पेमेंट करते हैं ना, उस इंटरेस्ट पेमेंट पे हमको टैक्स बेनिफिट्स मिलते हैं। अगर मैं आपको बहुत ही लेमन भाषा में ये चीज बताऊं कि हमने कोई हमने कोई प्रॉफिट अर्न किया है, ईबीआईटी, राइट? तो जो प्रॉफिट हमने अर्न किया है ना, उस प्रॉफिट पे हमको पहले हम टैक्स डिडक्ट कर देंगे एंड पहले हम जो है इंटरेस्ट का पेमेंट कर देंगे जो भी हमारे डेट होल्डर्स हैं, और बाद में उसके ऊपर टैक्स डिडक्ट करेंगे, तो ऑटोमेटिकली हमारा जो टैक्स क्या आएगा वो कम आएगा, ठीक? तो वी कैन जनरलाइज दैट कि ज्यादा अगर हमारे यहाँ डेट होगा तो ज्यादा हम इंटरेस्ट पे करेंगे, और जितना ज्यादा हम इंटरेस्ट पे करेंगे उतना ही हमारे ऊपर टैक्स बर्डन कम होगा, और अगर हमारे पास टैक्स बर्डन कम होगा तो हम ऑटोमेटिकली हमारी अर्निंग विल बी हाई, एंड अर्निंग विल बी हाई तो हमारी वैल्यू ऑफ द फर्म विल बी हाई, एंड वैल्यू ऑफ द फर्म विल बी हाई तो अल्टीमेटली आवर कॉस्ट ऑफ कैपिटल विल बी lower, overall cost of capital, that is weighted average cost of capital, right? So this is all about your NI approach, right? Our next important approach is your net operating income approach, NOI approach, right? So it is just reverse of NI approach. Whatever we have studied till now in our NI approach, net income approach में हमने जो भी पढ़ा, NOI approach में simply उसका उल्टा है। उल्टा कैसे रिमाइंड करेंगे, जस्ट क्विकली एक सेकंड में रिमाइंड करेंगे। एनओआई अप्रोच में हमने क्या पढ़ा, एनआई अप्रोच में हमने क्या पढ़ा, एनआई अप्रोच टोल्ड अस अबाउट दैट द योर कैपिटल स्ट्रक्चर एंड योर वैल्यू ऑफ वी कैन से फर्म इज इंटररिलेटेड, और वी कैन से एज वी changes our capital structure our value of the firm will also change। हम ज्यादा से ज्यादा डेट लेके आएंगे, हमारी ज्यादा से ज्यादा वैल्यू बढ़ेगी कंपनी की, ठीक है। एनओआई अप्रोच जस्ट उसका उल्टा है, राइट। एनओआई अप्रोच ने कहा हुआ, एनआई अप्रोच ने क्या किया, क्या कहा कि द वैल्यू ऑफ फर्म इज नॉट डिपेंडेंट अपॉन इट्स कैपिटल स्ट्रक्चर, यानी वी कैन से दैट इट इज इंडिपेंडेंट ऑफ कैपिटल स्ट्रक्चर। वट एवर द डिसीजन दैट अ फाइनेंशियल मैनेजर इज मेकिंग, I mean, whatever the decision about the equity and about the debt is making by the financial manager, it will not have any effect on the value of the firm. How? Because one single assumption that was in the NI approach is removed from NOI approach, and that single assumption was, in NI approach we assumed that the risk perception of the equity shareholders will not affect, चाहे जितनी मर्जी आप डेट इनकॉर्पोरेट कर लो अपनी कंपनी के अंदर, योर रिस्क परसेप्शन ऑफ योर इक्विटी शेयर होल्डर्स विल नॉट अफेक्ट। बस यही असम्पशन यहाँ पे रिमूव कर दी गई है, और इस असम्पशन के हिसाब से ये बोला गया है इस अप्रोच में कि अगर आप ज्यादा से ज्यादा डेट अपनी कंपनी में इनकॉर्पोरेट करते हैं तो आपके जो इक्विटी शेयर होल्डर्स हैं उनका रिस्क परसेप्शन डेफिनेटली चेंज होगा, वो ज्यादा अमाउंट जो है आपसे एक्सपेक्ट करेंगे। यानी कि अगर आपका डेट इंक्रीज हो रहा है तो ऑटोमेटिकली योर कॉस्ट ऑफ इक्विटी विल आल्सो इंक्रीज, बिकॉज उनका रिस्क परसेप्शन बढ़ रहा है। दैट इज वेरी नेचुरल, आई ऑलरेडी टोल्ड यू अबाउट दैट। अगर भाई आपके पास कर्जदार ज्यादा बढ़ जाएंगे, आपके पास डेट होल्डर ज्यादा हो जाएंगे, आपको रेगुलर पेमेंट जो है, जिसको चार्ज अगेंस्ट प्रॉफिट भी बोलते हैं, दैट इज नॉट डिस्ट्रीब्यूशन ऑफ प्रॉफिट, दैट इज चार्ज अगेंस्ट प्रॉफिट। आपका अगर चार्ज अगेंस्ट प्रॉफिट बढ़ जाएगा तो नेचुरल सी बात है आपके इक्विटी शेयर होल्डर कंसर्न हो जाएंगे। दे विल बी लाइक यार इफ वी आर इन द रिस्क सिचुएशन तो वी शुड बी डिमांडिंग मोर ऑफ रिटर्न, अगर हमें यहाँ पे ज्यादा रिटर्न नहीं मिला देन वी विल स्विच आवर कंपनी, सो डेफिनेटली देयर कॉस्ट ऑफ कैपिटल विल आल्सो इंक्रीज, राइट। सो अदर सिमिलर योर assumption is that cost of debt will also remain constant here, as well as your overall cost of capital will also remain constant. Overall cost of capital means KO, right? So it is also written here that the use of higher debt components in the capital structure increases the risk of shareholders। मैंने जैसे कि अभी आपको बताया, then increase in shareholders risk cause the equity capitalization rate to increase, as I already tell you they will demand higher cost of equity। ठीक है, अगर आपका higher cost of equity होगा डेफिनेटली आपके ऊपर जो है overall cost of capital increase करेगा ही करेगा, right? A higher cost of equity nullify the disadvantages gained due to the cheaper debt। I will tell you this by the help of this we can say this graph। See, this graph is little bit different from that graph which we have earlier read। ठीक, ये ग्राफ है आपका एनओआई अप्रोच का, वो अर्लियर वाला ग्राफ जो था we have studied about that was of NI approach, right? In this graph, as we already told that the KD and the KO will remain constant। So one point must stuck in your mind here is that KO is constant, it doesn't matter at all whatever the amount of debt you are incorporating in your company, it doesn't matter at all whatever the amount of equity you are incorporating in your company, the amount of KO will remain constant। And why this amount is constant, I will going to tell you in a minute, right? So going back to the assumption was that as you increase the amount of debt, your shareholders will become more risky and they will demand more cost। I mean the cost of equity will definitely increase। ठीक है, एनओआई अप्रोच की बात करें, एनओआई अप्रोच ने हमको बोला था जैसे जैसे हमारा डेट बढ़ेगा वैसे वैसे ओवरऑल कॉस्ट ऑफ कैपिटल जो हमारा डिक्रीज होगा। द रीजन बिहाइंड दैट थी जो इंटरेस्ट हम पेमेंट करते हैं वो इंटरेस्ट हमारा टैक्स डिडक्टेबल होता है, इस वजह से हमारी कंपनी की वैल्यू बढ़ जाती है, राइट। लेकिन यहाँ पे भी कंपनी की वैल्यू उस चीज से इफेक्ट हो रही है, यानी कि हम ज्यादा ज्यादा डेट अगर कर रहे हैं तो कंपनी की वैल्यू उससे इफेक्ट हो रही है, नो डाउट बढ़ रही है, लेकिन वो कंपनी की वैल्यू को नलिफाई कर दिया है और इंक्रीज इन कॉस्ट ऑफ इक्विटी। मतलब जैसे जैसे कॉस्ट ऑफ डेट का एडवांटेज मिला वैसे वैसे कॉस्ट ऑफ इक्विटी का डिसएडवांटेज भी मिला, और वो इफेक्ट आपस में एक तरीके से प्लस माइनस हो गया, जीरो हो गया, एंड हेंस वी कैन से दैट आवर ओवरऑल कॉस्ट ऑफ कैपिटल will remain unchanged। So we can say that our not net operating income will not have any effect on the value of our firm, right? So that is the second important theory that we have discussed. Now our third important theory is about traditional approach. What traditional approach tells us about? It is just like a mixture of your NOI approach and NI approach, and it is very easy and simpler to understand, right? You combine both approaches, both NI approach and both NOI approach, and you will get your traditional approach. So I'm going to tell you it in 2 minutes only. What is traditional approach? Think about NI approach. NI approach was telling that if you put some debt in your capital structure, then the value of company will rise some. All right, fine. If we go back to the NOI approach, then and what the NOI approach was telling? NOI approach was telling us that it doesn't affect at all whatever the amount of debt you put in your company. It is, you know, actually decisionless. It is effectless. It will not have any effect on the capital structure of your company. Fine. सो एंड ट्रेडिशनल मेथड ने क्या किया, इन दोनों अप्रोच को कंबाइन कर दिया और क्या कहा कि देखो, अगर आप डेट यूज करते हैं अपने कैपिटल स्ट्रक्चर में, तो डेफिनेट सी बात है आपका जो है टैक्स डिडक्शन की वजह से आपको बेनिफिट तो मिलेगा, यानी आपकी वैल्यू ऑफ फर्म तो बढ़ेगी। बट साथ ही साथ ट्रेडिशनल अप्रोच ने ये भी कहा, अगर आप ये एक लिमिट के बाद लेके जाएंगे इस डेट को, तो कंज्यूमर सॉरी शेयर होल्डर्स जो है वो एक तरीके से रिस्क अवर्स हो जाएंगे। रिस्क अवर्स होने की वजह से फिर वो अल्टीमेटली वही काम करेंगे जो उन्होंने एनआई अप्रोच के अंदर किया। तो वो क्या करेंगे, वो जो है कॉस्ट ऑफ इक्विटी को बढ़ा देंगे। तो सिंपल सी बात है, एनआई अप्रोच सिर्फ हमें इतना सा बताता है कि देखो भाई, आपको एडवांटेज मिलेगा डेट का, लेकिन वो डेट का एडवांटेज जो है ना, वो सिर्फ एक लेवल तक मिलेगा। इफ यू कैन सी द कर्सर ऑफ माई माउस, दिस इज द रीजन, हे इट इज द रीजन। ठीक, इस रीजन पे जहां मैंने अपना कर्सर पुट किया हुआ है, हेयर यू कैन सी दैट द केओ इज मिनिमम। इस लेवल पे केओ क्या है, इस लेवल पे केओ क्या है, मिनिमम है। और ये मिनिमम सिर्फ उसी वजह से है क्योंकि हमने यहाँ पे कॉस्ट ऑफ डेट को इनकॉर्पोरेट किया हुआ है। लेकिन ट्रेडिशनल अप्रोच ये कहता है, अगर आप कॉस्ट ऑफ डेट, अगर आप डेट को बढ़ाते ही रहोगे तो ये वाला रीजन क्रिएट होने में टाइम नहीं लगेगा। और ये रीजन वो रीजन है जब आपके जो वी कैन से द शेयर होल्डर्स है, वो रिस्क अवर्स हो जाएंगे, वो ज्यादा कॉस्ट ऑफ इक्विटी डिमांड करेंगे आपके डेट की वजह से। और जैसे आपका डेट बढ़ा, वैसे आपकी कॉस्ट ऑफ इक्विटी बढ़ी, और कॉस्ट ऑफ इक्विटी बढ़ने की वजह से आपकी ओवरऑल कॉस्ट ऑफ कैपिटल भी इंक्रीज हो जाएगी। राइट, द रीजन वाज सेम, दैट इट इज वन इन एनवाई अप्रोच, कि आपकी जो रिस्क परसेप्शन है आपके शेयर होल्डर्स की, दैट रिस्क परसेप्शन विल चेंज। फाइन, okay, after that we have our last approach, that is called is your Modiglani-Miller approach. Modiglani-Miller approach and your NOI approach is like brother and sister. They tell us the same thing. वो हमको same thing बताते हैं, what is your NOI approach has told you, and what is your Modiglani-Miller approach is telling you. They both concept are same. Just a little bit difference is there, which you have to incorporate in your mind, is that the NOI approach does not include the behavioral financial aspect into consideration. That's why this approach is different from your NOI approach. Modiglani-Miller approach basically includes the your behavioral aspect. It is more focused on your behavioral finance. So what is behavioral finance here is, I'm just telling you in a second that in MM approach, in MM there are two propositions. Proposition 1 states that it is completely irrelevant that how a firm arrange its capital fund, यानी कि ये totally irrelevant है एक फर्म अपने फंड्स को किस तरीके से अरेंज करती है, राइट। और इसका एक प्रोपोजिशन और है, प्रोपोजिशन second tell us about that the cost of equity of a firm depends upon three things. First is your overall cost of capital, second is your debt to equity, and third is your cost of debt. So basically these two mixtures tell us about that it is totally irrelevant that how a firm made its financial decision, or we can say capital structure decision. एक छोटा सा एग्जांपल मैं दूंगा, इसमें जो एग्जांपल हम यूज करते हैं वो यूज करते हैं आर्बिट्राज प्रोसेस का। Basically what happens ki if a company is going to raise some money from debt, so what actually happen is arbitrage process ke through a person, a rational investor will sell the जो ओवर हाइप शेयर्स हैं, या फिर वी कैन से द ओवर प्राइस्ड शेयर जो है किसी कंपनी के, वो ओवर प्राइस शेयर को सेल आउट करके अंडर प्राइस शेयर की तरह भागता है। और अल्टीमेटली दो कंपनीज, चाहे वो कंपनीज लिवर्ड हो या अनलिवर्ड हो, लिवर्ड का मतलब जिस कंपनी ने डेट लिया हो, अनलिवर्ड का कंपनी जिसका मतलब जिसके पास डेट नहीं है, चाहे लिवर्ड हो चाहे अनलिवर्ड हो, दे बोथ विल हैव द सेम वैल्यू just because of that arbitration process, and that arbitration process is your behavioral finance and nothing else, right? So this is your MM approach, right? So I hope the all the three all the four you we can say capital structure theory have made sense to you, and I made myself very clear to you. And thanks a lot for you to join the session. Thank you very much.